Welcome to Stock Market Today, your market briefing with actionable insights on stocks, bonds, crypto, and the events moving markets. Let's get into it. Bitcoin holding approximately $66,500 after 3 days of Iran conflict volatility. Ethereum at around $1,975. Solana at $83. The macro driver is geopolitics translating to energy risk. Oil spiked 13% after Iran hit Saudi Aramco's Ras Tanura refinery, settling at around $82 per barrel. That is the biggest oil jump since Russia invaded Ukraine. Gold pushing $5,350. Nasdaq futures off 1.5%. Higher energy prices fuel inflation expectations, delaying Fed rate cuts and tightening liquidity for crypto. Bitcoin initially dropped to 63,000 on 300 million in liquidations, but recovered fast. Markets are pricing in reduced escalation odds, but the Strait of Hormuz remains critical. 20% of global oil flows through that choke point. If Iran closes it, oil hits $100 plus, and crypto faces sustained pressure. Institutional sentiment is mixed. Over 9 billion fled Bitcoin and Ether ETFs in 4 months, but last week saw 1 billion in inflows. At the iConnections conference in Miami, 75 digital asset funds participated, generating 750 manager-allocator meetings. Nearly 1/4 of limited partners now allocate to crypto strategies. On regulation, the OCC proposed stablecoin rules under the Genius Act. Issuers cannot pay interest on stablecoins, but third-party arrangements may survive if structured as loyalty programs. Coinbase, Circle, PayPal, and Paxos will need to adapt. Key catalysts this week: February jobs report with consensus at 60,000 non-farm payrolls added, Riot platforms and core scientific earnings. CPI data next week will show whether Iran conflict inflation appears. Every $10 oil increase adds 0.2% to headline CPI. Bottom line, crypto remains risk-off until energy stabilizes. Monitor oil and watch for institutional flows as the real signal. That wraps your market intel. Trade smart out there. For deeper insights and real-time analysis, visit capitalcopilot.io.